from 2 billion to 10 billion. The numbers, I'm trying to get it in my head. So those, now you got to be careful with those. Those are not big companies, but they're not small companies. They're right in the middle. They have a little volatility, and that's when you start to get the large cap, small cap, and micro cap, you don't get too many analyst reports. Analysts don't really look at those stocks or tell you how the stock is, the good points and the bad points, and what they predict the stock to do. Only like the mega cap and large cap get the analysts on your screen telling you what they think that stock is. You start to lose a lot of analysts when you get down to the large cap. And like I said, the large cap is from 2 billion, from 10 billion to 200 billion. Then you got the small cap. Now, these are very dangerous stocks. And this is what I do. I do small cap. What it is, there's a big reward and it's a big risk. You could take a big uptick and a big downfall, because these particular stocks, you could lose 50 points in one day or gain 50 points in one day. They are very volatile. You can make a lot of money. I'm a risk taker. Or you can lose a lot of money. You don't have really hardly no analysts telling you what they think the stock is. You have nobody directing you. Well, I'm going to tell you how to solve that in 1 second. But these are really volatile stocks. You can lose a lot, but you can gain a lot. You can lose $1 million, gain $1 million, And small cap range from 25 million to 2 billion towards market capitalization. I told you I have a tough time saying that word. And then finally, you got the micro cap. Those don't hardly no analysts going to give you any. They're really small companies, basically. You don't have no analyst report or anything, but you can. It's a big upside. And it's a big downside too. They're very volatile, and you can make a lot of money or lose a lot of money. And they range from 50 million to 300 million towards market capitalization. Okay, that's one thing. Okay, now the small cap, they seem very dangerous, but the key to all the stocks, to me, what drives stocks the most towards going up and down, to me, is the news. There's a lot of things, don't get me wrong, and I made a lot of videos about that. But the news, to me, is the single most important thing. You have to look at the news. You have to look at the overall company. You have to look at the competition that the company has in the world. You have to look at what is the company doing at that time. What is the leadership of the company? All that stuff. But the news, it can say a stock is at $50 a share, and it's trading at $50 a share. But we're going to raise the target price to $100. I almost guarantee that stock is going to go up. The news is very important. Or somebody trying to cure cancer. All of a sudden somebody say, we're on the next stage towards curing cancer. See, big news like that will drive stocks more than anything, I think. That's my personal opinion. The news is what you want to look at. What is that stock doing at that moment? I mean that. The news is very important. The volume is very important too, and I'm going to get into that in 1 second. Okay, the next thing is that you're going to see on there, it's going to say beta. B-E-T-A, write that down, beta. It measures the stock's volatility. It measures the stock's volatility, but I want to indicate the market. See, the beta has a number next to it. And I don't know. The market is usually at 1.0, and beta falls in that category right there. So I don't know too much about beta. This is some of the fundamentals of stock, and I don't think it drives stock that well, but you're going to see that name on there, beta. So you can look it up, Google and things like that. But I don't think it drives it that well, but it's very important. It is. The next thing is volume of a stock. Now I want to get into that right here. And this really can help you out here. If a stock is going up, write this down. And the volume is like shooting off the page. Say the average volume is 5 million, but all of a sudden it's at 40 million or 50 million. It's going crazy, but the stock is steadily shooting up. That means that stock, that's going to show conviction to everyone. People are going to want to jump in, and that stock is going to keep going up. But you have to be careful. Watch that volume. When the stock starts to slow down, sometimes the stock could do a sudden turn. It can start decreasing on you. So you have to be careful. You have to watch that volume. The volume is very, very, very important. So the volume is just shooting off the page, but all of a sudden, you gotta be careful when it starts to slow down, or if it starts to decrease, or just stop. You gotta watch. A lot of times, you up $20 per share, all of a sudden it could go down to 15. It could go down to 10. All of a sudden, you don't have no gain. So you have to watch that volume. That volume is very, 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 very important. Okay, you're gonna see something at the top of your page that says outstanding shares. Ooh, the more outstanding shares, I really believe, the better. Because basically, it's the total of, well, it's not the total of, it's the total dollars of company shares held by shareholders. That's what, and that's very important too. And the last thing I want to talk about is PE ratio. That's price to earnings, and that's well, it's basically, am I back on? It's basically how much investors are willing to pay, I get it right, for each dollar of company's earnings. Now, what makes it attractive is when it comes to PE ratio, the higher the PE ratio, it makes people think that stock has a lot of growth. It's going to start to take it off. It's going to start to go up. So watch the PE ratio. People are going to look at that, and when people see a high PE ratio, they think that stock is going to go up. But the other side of that is if you have a low PE ratio, it could be a good thing too, because people are thinking they are getting a discount stock. That could work in your favor as well. So these are some helpful hints, and I got a lot more, and some things I got it written down because there's so much you got to remember when it comes to the stock market. I don't know everything. But the little things that I think you need to write down and look at before you buy a stock, I'm definitely going to bring it to your attention. But like I said, I think the most important thing out of everything I just said is the news. Watch the news and watch the overall picture of the stock, the leadership, and things like that. Watch the price target and things like that. Watch and see on the news. I'm talking about the news. If it got upgraded or downgraded, things like that. That's what drives stocks more than anything. And that attached to the volume of the stock, you'll be in good shape when it comes to buying a stock. Good luck out there, and I hope you make money. Thank you so much.